what's going on. And we'll talk about the state of the market. But you know, when I got home from work, I work midnight to 8 a.m. So I get to see London session, I get to see New York Open, and when I came home, I saw this candle. I saw it turning blue, and then delta being negative. So there's a deviation. The bias is towards the candle on the deviation, and it was bullish. And with it being Friday, I usually don't trade on Friday, but I went ahead and took a look at my gas fees for Covey, and just kind of what's going on here. And I have 0.1579. I don't know. It to me, it seems like if I wanted to one cut all my positions and then add new positions, it would totally be gone. Like it would be gridlock, and it just sucks. It like sucks so bad when I have to like get rid of all these positions, but on top of like adding new positions, it just gridlocks the whole thing because it's just not enough. I don't have enough to really pivot like that. I was like ready to shift positions before we had that explosive move, and I'm getting caught up in some kind of what's it called, H4 market structure break. This is the H4. There's a deviation versus the H12. The H12 is green the whole time, but then to get in quick for our top, you would play the H4 market structure break, and but then when it comes on the retest, that's when you really find out retest resumption to the downside if it really is real. But the thing is, like, there's been two of these, or almost three, one, two, three, in a week's time. It's 17 days. So there's been a lot of fake outs, and I've run into problems on this one, on the fake out here, where I'm trying to switch. Like I had to actually hit reset. I had to hit reset on this thing because I knew it would get me out of all my positions. But the thing is, like, I run out of the gas fees. Like, this is not the only time that this has happened. Like, this has happened twice this week, and there's this time again. And the premium you pay to get in to be first is to be agile. But the thing is, I can't be agile when I'm like bottlenecked on these gas fees. And where it's like, oh, you don't have enough gas fees, you have to request. Oh, you have to wait till the next day to get these gas fees, and I just can't do it when I'm going through this H4 H12 deviation where the H4 is bearish, the H12 is bullish, and I'm trying to be first to be able to get in on a shift change of trend. And the other option is where I go along, I be the nice guy, and don't complain and just wait for the H12. But the thing is, like, when you're going for alpha, you're also going for being first in a lot of things. So like, that's the one downside of Covey that I've seen. I'm gonna post this to YouTube. Is that when it comes to like the alpha-ness, it doesn't. They don't really support you 100% on capturing alpha. They want to support you kind of on their terms, which is fine. Like it's kind of what they can do. But when it comes to being first, it's I don't know. Like I was hoping if I got tokens, I would be able to get some kind of extra stuff for more gas fees, because then I'll be able to pivot quick, be nimble. Like in a choppy market, which this is a choppy market, you got to be nimble, and that's kind of what I was trying to do. But yeah, with us being so overbought right now in the RSI, like I felt comfortable with not really uh, going through all that hassle of going long again. I just feel fine. I'm like, you know what? I'm gonna, f the leaderboard. I'm not going for third place or second place anymore. I'm just gonna hold on to my positions, and that's my choice. But at the same time, like, I wish I had more gas fee stuff. Like, I don't know. Like, I really hate the choke point when I get caught into this like pattern of like these fake outs, and then I'm shifting and I'm able to shift on time. Like I see the deviation coming. Like, I saw the deviation coming on the downside right here, for the H4 market structure break. Down candle. Oh, is it no? Here, down candle, bullish delta, bias to the downside, and I caught that. And then when it came to the reversal, I it's just the gas fees. It's just so quick. Like switching to a short portfolio from a long portfolio, it takes up a lot of gas fees. And then switching from a short portfolio to a long portfolio, it takes up a lot of gas fees. And there's only so much I can do with Covey. There is some limitations, but that's what I would say. And now, with the institutions really going short, it's just a matter of time before the market structure breaks for real and goes to the downside. It's a little bittersweet because I'm okay with holding my positions because the institutions are short on the timing solutions forecast. We're in the window of a reversal at any time between like now till 11:10. We're expecting a reversal to the downside. And it's just I'm like super early. We're kind of waiting on a market structure break, and maybe this is the left shoulder, and we reach the 72 moving average. But that's the price I'm gonna have to pay on my portfolio of just being in at a really early time. Like hopefully I get a huge engulfing that puts me at an advantage in comparison to others on the short side, and I win on the month of November and December on the short side on gains. That's the hope, and I still think with the market structure still short on the weekly that we have further downside. I mean, we also have order blocks to the downside. I mean, this candle, in order to go bullish, it would have to reach all the way up here, past pretty much there, like a weekly bullish break. I mean, at least it would have to close above there for a real weekly market structure break, like it did back here. But the thing is, when it came back to retest, it was totally a false breakout. But yeah, it's still bearish. So that's pretty much as what I would say. It's still bearish. Still aiming for the downside. Who knows how far this squeeze can go up? It looks like we're halfway. And looks like we're at resistance. I mean, if we were to do the left shoulder thing, it's right there. Didn't close above it. So as long as, I mean, we could wick up above here, but it can only go so far. And I'm thinking it's that 72 moving average that is all the way back here. 72, and then this is I think the 150 daily. So it's one of those two. So we're close, and I'm praying that there's a big engulfing to the downside. So then, and it most likely will not be. It's most likely going to go sideways in that weekly fair value gap that it filled. Let's see if I can find it. Yeah, it's right here. We filled it. We filled that weekly fair value gap, and now it's a matter of what's going to happen with here. Like, is it going to go back into it, and then is it going to just range inside it? Like the whole smart money concepts with fair value gaps and all that, and the specific rules, like it's got to close inside it or this or that. And also we hit the daily fair value gap too. I just see these things as like magnets. I don't really attach any special meaning to them. Let's see. Yeah, we maybe it's got to fill it. It didn't fill it all the way, but let's see. I think I did that correctly. This is the daily. Yeah, it is. It didn't. It never really got filled all the way. It wicked. But yeah, it didn't fill it all the way. like it did on that weekly. This weekly totally filled it. Like this value gap is gone on the upside. So it's closer to equilibrium, and with it being filled, and then this daily gap being filled, it's going to be really close to equilibrium and overboughtness. I mean, on the RSI, we're getting close. Let's see, daily, we're almost at 68 on the DAX. The Dow is over 68 on the RSI. On the S&P 500, we're at 55, so we could definitely go higher. It looks like. It's just I'm done as far as going to the long side. Like I'm ready for the short side, and if it costs me the performance of this October, it's fine. Like I with going against somebody who's like 80, 90, 100%. I had no idea how he got that. I looked at his portfolio, and it's got Chinese, it's got oil, and I don't know, oil, like USO. I looked at that. That had a nice gap fill. That it moved like over 12, 13% for him, and that was a really good play. XOP and the other one. So there's XOP for oil exploration, and then there was an XLE. I think he did XLE. I'm not 100% sure. But I know he did. Oh, OIH. It was the OIH gap fill, and then he did USO and XOP, and but the big gap fill was OIH. That's what it was. For the person who did like 80-90%, and then the guy who did 50%, he was just sitting neutral, and maybe that's the way I should have been. Like I don't know. Like I did. Who could have expected this chop right here, the deviation between the H4 and H12 market structure? But yeah, like I'm starting to see that's like something of a source point that I need to watch out for, and specifically, I like I forgot what his name is, but being able to use the 8 EMA with the daily and that kind of like as a guide. If the day closes below the 8 EMA, then definitely get out. Yeah, there we go, EMA. Because we could see that we haven't really closed. Well, this is not on the right one. On the ES, I mean, we haven't really closed. This one came close right here. Oh, this is the H12. Yeah, on the day, we haven't really closed below the 8 EMA. And that's something that can help me with the H12, H4 divergence of market structure, and really, I guess, keeping a level head in just in my rotation, like more bullish bias because we haven't had a daily. But at the same time, like I don't know, like I think this is just a weak point in the trading system that I'm gonna have to just incorporate as like a big factor, is like really working on this H4 H12 divergence in positioning in my portfolio. Maybe whenever there's an H4 divergence and the market structure break, positioning maybe a fourth of the portfolio or half short instead of going all in, I think. But the thing is, the gas fees, like I'm going to be doing more positions and more frequently, and there's that problem again. And I hate to say it, but Covey, you need to increase the minimum alert to request for gas fees, because like when it comes to alpha, like it's just it's the nimbleness, especially in this choppy market. You got to be able to have it. You either have it or don't. And I don't know. That's just my 10 cents right there. All right. But yeah, I basically gave a market overview. Still short. I'm still bearish. Most risk off looks bearish. Whether it's the reverse repo and the banks wanting to be safe and liquid. SOFR versus repo, secured overnight financing rate. So this is the reverse repo. Banks are scared. 2019 before the COVID nuke low, and we're higher than that. So secured overnight financing rate, negative on the spread versus minus reverse repo, 10-year break even minus reverse repo. We are negative on the spread. Banks are paying a premium basically for reverse repo and to be safe and liquid. So they are scared. The U.S. dollar, Euro U.S. dollar, the Dixie inverted, which is Euro USD basically. We are still caught in this box, in this range of no man's land right there. NFCI caught in too much risk, too much leverage, not enough credit for the NFCI. Consumer sentiment still weak, and we saw that in Amazon and their earnings, suggesting for weaker consumer. And then production versus inventory, high inventory, low production. 3-month, 10-year finally inverted this week. I guess for the second time. 5 and 30s already inverted. 2 and 10s inverted. High yield growth, credit spreads. We're definitely overbought here. If we were to kind of put a range on this thing and see if there's like some kind of max, maybe it's the quarterly. I'm not getting a range here. So I think it's kind of out of my hands. No matter how many time frames I go down, let's see. This is suggesting a range. So it looks like we might have a little more to the upside. So according to this range, let's back it up. So it's suggesting we could be putting a deviation up here, left shoulder, deviation, right shoulder, breakdown. But and it looks like maybe we broke out. I think that's a breakout to the upside. So it really is reflective of just what's going on in this monthly band is also suggesting that we could be heading all the way up here into the zone, or roughly this zone, but we'll wait and see for the credit spreads. The higher growth credit spreads, we're into resistance, and we'll see coming to the quarterly close what it's going to look like. But long-term credit spreads look terrible. Lumber versus gold, weakness here, resistance on the lumber versus gold, gold strength basically. Getting resistance here. We definitely hit that moving average channel high and hit resistance. We're kind of shrinking back. Gold strength versus base metals, copper versus gold. Basically weakness. We're still not trending in any way. I guess we're trying to hold this level here. So it really depends if we can hold this level for more strength to the upside. Oops. So we're waiting and seeing. We got 2 months and 2 days for the result of that. And then junk bonds versus TLT. We've entered the rejection zone for junk versus TLT. We definitely have a little more if we could to the fake out zone, 6%. So that would definitely allow the S&P 500 to move a lot more to the upside. So that might be on the horizon where it's just more upside, and we're able to expand in this range. We're able to go a little bit further, maybe another 2.5%. I don't have any other market structure. We would have to move this to the daily and see kind of what market structure breaks took place. We have to take off this color candle. So here the only market structure we broke was this last high here. We are currently under this daily. We need to change this color because it's starting to make it hard. We gotta put it, call it daily resistance. And then the next one would be here. So if we were to go more, we would see a market structure break. Oh, we got another one there. If we were to go more, we would see market structure break or close above these lines. And but right now we have to assume that that's resistance, and that we're going to consolidate a little bit more, and that could be it. You know, with timing solutions, with the fast moving cycle, fast AI math cycle, it's saying that that's possibly the top. Like and then the institutions being bearish right here, money flow index. We have to assume that that's it until, but we know that that's not it because we reset on the market structure to the upside, and we're waiting for a confirmation to the downside, another H4 market structure break to the downside. And in order to get that H4 market structure break to the downside, we need to see some consolidation and a breakdown right here, roughly below this wick low. But yeah, this is suggestive that it's going to come back a retest, and we're going to see if it holds. If it holds, we go higher. And I don't know, the fake outs are real here on this H12, H4 market structure break. If we were to close below on the day, below the 8 EMA, that would set us, let's see, on the day, yeah, we would have to have a huge engulfing. And I don't know if that's going to happen. It really depends. We could check back here and it doesn't look like, it looks like there's another deviation. I don't know, like this thing's blue and the delta's negative, but so it looks like maybe further upside if we were to just go on the delta deviation alone on the H4. But yeah, it may be suggestive of more upside, and then we'll have to wait for that 8 EMA close on the daily to really come through before getting involved. So it means maybe this would be the thing that would knock us down, where that's the top or resistance. Like no one can really know until after it's confirmed. And I'm not really into just trying to pick a level. That's I think kind of what I was when I was learning about the fair value gap. I think that's kind of what people in the smart money concepts were trying to do. They were trying to pick a top based on smart money concepts, and that's just a bad way to go about it. Like it's usually these places for the fair value gap are great magnets. That's just the main key takeaway, is that they're great magnets for price to go to for equilibrium and to restore balance. And then at the same time, we're looking for a break in market structure to the downside around here. But at the same time, you got to be nimble, and that's the thing. Like that's the problem that we're experiencing right now. Is just the nimbleness is just too difficult. It's just too difficult to keep up, and I hope they fix it at Covey. Like that's my only wish. So thanks for watching. See you in the next video.